That's right, why I do not mind down days or weak weeks in the market while being long stock in my portfolio. 2022. Well, how we might not miss you. Looking back over the year, we know it has been a rough ride for traders, options investors, and more. We've seen shifts in the market due to rate hikes, discussion of rate hikes, and much more going on in the economy. We've seen sudden gaps. We've seen general market apprehension, fear of the R word recession coming up as well. In the last 10 days or so, we had a big week, an end of December decline. The Fed hike and talk disappointing investors, announcement of weak retail sales for November, housing market woes, and of course, more and more articles and talking heads talking about recession for 2023. As we know, and as you know, these kind of declines can destroy portfolios. Stock only, holding various core holdings in your account, even if you're diversified. Covered call strategies, which generate a small hedge, 1, 2, or 3%, but anything beyond that decline causes a negative value in your portfolio. Naked or cash secured puts and stocks going below the short put strike price to where you may be assigned or be forced to buy back the put, roll it further out in time trying to look for a credit. And of course, bullish spreads, bull put credits, bull call debits, or even buying calls. Although people say they are a low risk, they are just a known risk, and both can be down 100% during a big week like we've just seen in the last 10 days. And of course, in 2022, it was not just this recent cycle of the past few days. We've done over 20 webinars this year on management for covered call positions. When is it beneficial to roll a covered call? Rolling a covered call that is now deep out of the money, and a similar number of presentations for rolling naked puts or cash secured puts. Rolling a deep in the money cash secured put, rolling a deep in the money sold put far out in time in order to try to get a credit, what to look for, when to look for it. And of course, we've had many discussions with the ups and downs when investors got faked out about trying to manage or roll bullish spread positions that are nearing full loss. Well, with the market being the way it was, even bearish credit spreads by themselves were not successful. During 2022, we did a series of is it possible to make 3% per month in the market? We looked at spread positions in part 1, and at that time, looking for high probability bear call credit spreads, 85% probability or higher, on stocks that were declining, were still down 16% as of September 2nd. The SPY was around 400 at the time. We showed that using the market sentiment tool and power options, you had to move with the market and change from bear spreads to bull spreads when the market sentiment changed from a very bearish sell warning to a bullish buy warning in order to profit with the targets you expected. In the last 7 to 10 days, I currently have Anet, Arista Networks, stock position in my portfolio. It's down about $14 during this end of December decline. From a peak of around 136 down to just below 122. But I did not mind too much. Why? Because the position is in the proper, protected, radioactive married put structure. The initial trade, opened on October 4th, was a married put purchasing the stock at 120.47 and at the same time buying a far out in time March, slightly in the money put. The combination of the structure meant that we could not lose more than 8% guaranteed on the position, and that's only in the worst case scenario. But we don't just set a married put position and hope the stock goes up. We have 12 different ways to make adjustments called income methods discussed in our full course, The Blueprint. So from the inception of the trade on October 4th, we were able to generate some income, use the put as our second working asset, and lower that maximum risk to only 2.4% on the position while still realizing positive gains that matched our targets. Now, the position was opened on October 4th, and shortly after that, the stock took a wild ride down. But then it recovered, whipsaw market as we've seen in 2022, and we were able to do some adjustments. We see that initial decline in the first 8 days. I could have made an adjustment here and lowered my cost basis on the position, essentially being paid to average down the stock in that proper protected structure. But we didn't do anything at that time. As the stock began to recover, on November 1st, we were able to use the put option and make an adjustment to lower the risk down to 6.1%. Hey, we also wanted to reward ourselves with the increased price and the proper stock selection, so we used income method number 1, selling a call to create a collar to reduce the risk down to 3.4%. Shortly after that, as the stock continued to move, we adjusted that sold call, the income method number 1 via income method number 2, to cut the risk down to 3.2%. And then later on in December 2nd, we used income method number 2 to roll the call again, and we're able to reduce that risk down to only 2.4%. Both selling premium, as we would with a covered call position, but we had protection in place and the ability to use the put option to lower the risk as well, our second working asset. So as we hit this end of December decline from about the 13th to the 20th, we did not have a big worry on the position. After using that last income method to roll the call, here's where our position stood. We now own the March 130 put at a cost of $14.80, and we sold the 16th of December 139 call for $2.90. We have a general collar structure or a calendar structure, a protection where we can't lose more than 2.4% in a massive decline, further than what we've seen, still the potential to make an 8.5% return on the position in the best case scenario. But as we had a weak week and down days, the stock was declining, but our call and our put were able to hedge the position effectively. Now let's take a look here, looking at the historical tools on power options. On December 2nd, the closing price of our December 16th 139 call was $2.15. And midday, we were able to get the $2.90 premium. But as we see, we took in the $2.90 premium, and as the stock price declined, came back, we were losing time premium also, and then declined again, that $2.90 is going to zero value. As the net fell, we get closer to expiration, the call premium decays, and we're realizing more of that $2.90 premium we already collected. And in relation to the put option, right before that decline, or right when the decline started on December 13th, the put was trading at around $8.70 with the stock at $133. But as ANET fell, the proper protective put gained in value. It not only gives us a guaranteed exit, which is better than a stop order on the position, we still have 90 days to expiration, so we have intrinsic value as the stock declines and time value remaining on the position. So as the stock fell to around 122 and just a little bit below it, the put increased in value from $8.70 to $13.70. We're gaining $5 on the put value, which includes both time value remaining and the intrinsic value below the current stock price. And not minding down days or weak weeks in the proper structure, yes, the stock declined $14 in a few days. We gained the full call premium of $2.90, and we saw a put value increase of $5 from $8.70 to $13.70. That loss of $14 was countered by a gain of $7.90 in the proper protected structure. Now, is the position still down? Well, profit-wise, yes, from where it was. When the stock was trading at around 133, we might have been looking at a liquidation profit of $800 or $850 for 100 shares. Now, as the stock fell $14, we gained $7.90 back. It's still a loss of $6.10, but we're still in the profit zone of around $200 and $250 for the position. Remember that put structure is still out to March. We still have the ability to use up to 13 different income methods as discussed in the blueprint course to further reduce the risk, increase potential profits going forward, reduce the cost basis, and maybe even bulletproof the trade. Would it have been better to close this full structure before the decline? Well, possibly if it was caught in time. Or could have used other income methods to profit in a down direction or in an up direction if the stock recovered. But in the blueprint, we discussed what's called the SIGA model, and my SIGA model for the ANET position was different. SIGA is the decision-making process we use for the radioactive married put positions and deciding which income method to use against that structure. What are the current conditions of the market and my stock itself? What are the expectations going forward for the market or for my underlying security? What are my goals for the structure itself? What return am I looking for? What hedge am I looking for if I'm expecting down days or weak weeks in the market? And that determines my action for the position or for the income method I'm going to use going forward. Now, to highlight this, we had a recent question from a blueprint owner come in last week. Victor had asked, in light of recent events and current discussion, are you still planning on opening new radioactive positions going forward? Now, any losses this week, that week of December 12th roughly to the 16th, are due more to market conditions than any fundamental issue with any particular stock. And still losses might continue. Are you closing any current positions and taking losses to avoid further loss? As we saw, the positions in the Fusion portfolio are still at a profit. I'm still in the profit zone on ANET, NEM, as well as Ernie's in profit positions with his married puts that we post in the Fusion portfolio. The market sentiment tool and power options was starting to show a light buy. Positions can still be adjusted based on my SIGA model, using that second working asset, my put option, to manipulate the trade and still use other income methods, maybe as simple as selling a call or doing a riskless spread trade inside that nested married put, all discussed in the blueprint. And of course, yes, for uncertain markets, possible recession in 2023, the R word, looking to protect positions and mute market volatility, I'm still considering open new married put positions going forward. But moving forward, Ernie actually did open a new trade on December 20th, a married put structure with a controlled risk in place following the blueprint and the default married put search and power options. Ernie opened box at 31.31, but at the same time bought the preferred structure, a 16th of June 32 strike put for 320. This gave him a controlled risk of only 7.3%. And again, that's in the worst case scenario. The moment he opened this position, he could have liquidated the position for only a small loss of maybe 0.1 or 0.2%, just the bid-ask spread of the put option. And Ernie decided to go ahead and generate some premium right away by selling a 20th of January 32 call for 85 cents, which lowers the maximum risk to 4.9% and looks at about a 30-day out profit of roughly 3%. This again is one of the new trades that was just posted in the Fusion portfolio at radioactivetrading.com. Now, income methods are not always done right away. Ernie decided to do this based on his SIGA model for the box position. But sometimes forcing an income method or trying to generate income against the protective position can actually get you in trouble, which is why it is important to get the blueprint course to follow the proper protected structure correctly. Full description of the structure, ins and outs of all 13 income methods, generating premium, riskless spread trades, manipulation of the put option, and really 4 different ways. How and how not to use them correctly. And chapters on combining income methods, when to exit, close or adjust the position, case studies, and much more. The blueprint is an all-electronic copy, and of course, it's the full guide to not minding down days or weak weeks in the market. And now, of course, is the best time to get the blueprint. our special end-of-year offer for the blueprint. You can check that out at radioactivetrading.com/EOY. Up until December 31st at midnight, we're offering 8 special bonuses if you pick up the blueprint course. You can get your first 2 months of the Fusion portfolio and the Fusion subscription at radioactivetrading.com, which includes lessons, basic search, view of our open trades, and more. The first 2 months for only $10. That's $59 off the regular subscription price for your first 2 months, and you can take that whenever you feel you're ready. The Fusion subscription really helps accelerate the learning curve of the blueprint material. If you pick up the blueprint before December 31st, we'll also include one of our Mastery Series videos, the Forts video, Foundations of Radioactive Trading. You'll have access to that electronic video. It's usually an $89 value. You'll get it for free. We'll also include the 4 Insiders Secrets of Trading video, the FIST video, a compilation of our most requested webinars. You'll get the Quick Start Guide, a $50 value designed to help you eliminate the guesswork about how to transition from covered calls, spread trading, and other strategies into the married put structure and the concepts behind it. You'll also receive 1 month of the patented Power Options tools for free. If you're already a subscriber, you'll just get an additional 30 days for free. And if you're not currently a subscriber, that free 30 days will be waiting for you. It won't start until you first log in, so you can take your time, review the content, and start when you're ready. The blueprint is now an all-electronic copy, so you get instant access. If you purchase the blueprint before the end-of-year special bonus offer ends, you'll receive a link immediately to log on to our educational portal, learn.powerop.com, to access the materials. Of course, phone and email support is completely free. You can email or call Ernie or myself at any time to discuss the concepts of the radioactive trading, married put technique, setups, income methods, and much more. You'll also receive instant access to members-only content, blueprint owners-only webinars, white papers, and more. That'll be available at Radioactive Trading as a blueprint owner. You can log on to that at any time. The benefit of some of those members-only presentations, insights into using some of the different income methods in difficult market times, as well as a full video on playing the bear side of the market with a proper protected structure and limiting risk to 5 or 6%. In addition to those 8 bonuses, the blueprint comes with a money-back guarantee. If you're not satisfied within the first 30 days or so, or you don't feel the content's really going to help your portfolio moving forward into the new year, just let us know. We'll refund your purchase price, no questions asked. But remember, special offer ends December 31st at midnight, so you want to act now. Get your blueprint. Go to radioactivetrading.com/EOY or go to radioactivetrading.com and click the Products tab to access the blueprint and see more information and details. The best way to not mind the down days or weak weeks in volatile and turbulent markets. Proper structure in place, still ability to use income methods, controlled risk, better than a stop order. Head on over to radioactivetrading.com/EOY or go to radioactivetrading.com and click the Products tab. Get your blueprint today and lock in those special 8 bonuses before December 31st at midnight.